Chris Becker, blockchain technologies lead from Investec Bank, with us today. Chris, in your previous role, you were an economist and strategist doing research for large corporates, asset managers, and hedge funds for a decade before entering blockchain technologies full-time in 2017. Your bio says, I commercialize decentralized blockchain technologies and digital assets for the benefit of Investec clients. You're an experienced economic strategist with a keen interest and focus on the history of money, credit, and banking. Few people also know you played rugby for Stellies, so an Englishman in the Boerland. Welcome to Troycast.
Thanks, Dan. I'm not an Englishman. I anglicized, became a sort of quasi-Englishman at high school. I went to Rondebosch Boys and I was in the boarding house. Grew up Afrikaans.
Uh-huh.
And going into standard 6, grade 8 as an Afrikaans boy into this English boarding school. You need to learn to speak the language pretty quickly, or be teased.
It's the same as my side, yeah. We were anglicised in school.
Yeah.
Becker.
Yeah.
Okay, that's you flummoxed us, all of us. All
so
right.
I kind of operate between the two, Afrikaans and English. Obviously, when I need to speak Afrikaans now for business, I really struggle to get the right words in the right places,
But business is English, so okay. We've seen you on a lot of presentations, a lot of interviews, so we're actually excited to have this. I think we wanted to take a bit of a deeper dive into some of the other concepts of specifically money and freedom. As you know, this is the Troy Gold podcast. So, but I thought we'd get to know you a little better with a few random quick fires. So, number one, Contrarian. Are you one? And what does it mean for you?
Depends. So I'm contrarian when I need to be contrarian. I'm quite a conservative guy, pretty mainstream. But as an economist, working as a professional economist, not for a large organization, I had to talk about things that were interesting and unique and different. Otherwise, you're just saying the same thing as everybody else. And that kind of never made sense to me. As economists, everybody has these forecasts that kind of just track each other on all the different metrics. And there's this very small margin where forecasts vary. Mm-hmm. And to me, it seemed kind of pointless to be making those forecasts. So my comfort zone is to look for where consensus is wrong, and I can sort of come to a conclusion, have a reasonably high level of conviction that consensus mainstream economists are wrong on something, and then I make that call. And so I operate in a space where it's uncomfortable for a lot of people because it's typically these asymmetric bets. These things that no one's talking about, I like to talk about. So it gets a lot of people quite uncomfortable. And I guess you can call that contrarian, but I'm not doing it to be contrarian for the sake of being contrarian. I'm actually looking for areas where there's error in prognostication or in assessment, in analysis and in analytical processes. And then I typically like to make those calls.
It would appear that these areas where you see that consensus is wrong seems to be, at least based on your background, where there are seismic shifts happening actually, or foundationally, in the current traditional financial system, right? Is it correct to say that that is what pulled you into the blockchain side since 2017, where you found that this fringe or frontier element of two financial systems, the birth of a new one and the traditional one coming together, is where a lot of consensus was maybe asymmetric or incorrect? Yeah,
so I remember looking at global geopolitical dynamics in 2016, 2017. Trying to understand the direction that the world's going in, understanding that the world's in a fourth turning, which means it's an era of dislocation. Looking at the state of the credit and monetary system, and it seems like something needs to give, something needs to break, there needs to be some type of a reset or a cleansing of the system. There needs to be some kind of a forest fire that cleans things out so you can have new, fresh growth. And it was in that kind of environment that I started understanding and realizing that decentralized digital currencies like Bitcoin and Ethereum creates a very interesting. It's a very interesting technological innovation at a very specific point in time where the world's going to need distributed systems in order to find neutral ground, in order to be able to transact with each other, to transfer value, to form agreements. Obviously, the big area that's been lacking on the internet is it's hard to form agreements over the internet. Mm-hmm. When you make an electronic payment, for example, from your bank to an overseas bank, there's so many intermediaries between those transactions that facilitate that value transfer. And that's why it's slow and quite expensive to make those value transfers. Now, in a world where nations are fighting internally, so like Brexit, leaving the Eurozone,
currency wars,
the conflict between the left and the right in the US and the culture war around that. Late last year when the US 2020 election was happening, there were what seemed to me to be legitimate concerns from some major American states, mm-hmm. like Texas, around the validity of the election results. Mm-hmm. There was an allegation that there had been fraud, and it's not being sufficiently investigated. And Texas and 17 other states made a statement essentially to say, well, Texas made it first, and then 17 other states said they'd join in, that if the Department of Justice and Washington, D.C. isn't prepared to follow the Constitution on an election, mm-hmm. maybe they should break away and follow the Constitution, the American Constitution themselves, which started speaking to internal strife, internal tension, risk of civil war, risk of secession of major economies within America. And if that had to happen, for example, what happens to the dollar?
Yes.
If Texas, for example, stops paying taxes to the federal government, what happens to government bonds? And it's in this environment of increasing dislocation and distrust and mm-hmm. political fissure and tension that Bitcoin and Ethereum and gold mm-hmm. become the perfect alternatives to what people have trusted over the last 60 odd years in fiat currency. And so that's where those pieces of the puzzle for me started to fall together around cryptocurrencies, and why I think they're going to play an incredibly important role going forward. But I've got into a long ramble here. Do you want to do rapid fire?
I think that's exactly what we do before. We have no rules in this podcast, so we can do whatever we want to. I think what is interesting though is that you, speaking about sort of the dislocation in the current fiat currency system, right? You actually gave a talk as a keynote speaker at the blockchain conference where you, even on a local sense, you took us through the history of money in South Africa. I think you said 1921 the Reserve Bank was created to again manage stability. Then there was the period of the Rix dollar, and we had a pound sterling or £2 system, if I'm correctly.
Yeah, so the Rix dollar operated in the 1700s.
All right.
Yeah, it was a silver monetary standard. Mm-hmm. The central bank in the Cape Colony was known as the Lombard Bank. Wow. It was put in basically given the mandate to manage this silver standard as money. The Rix dollar essentially collapsed over issuance of paper, back relative to the actual physical money specie. Then South Africa wasn't South Africa yet, obviously.
The Union.
The economy, the people living in the southern African region predominantly started using gold as money in the 1800s.
Okay.
The Lombard Bank had collapsed by then. Well, it was in the process of collapsing. Gold became the money of southern Africa and obviously tied into a global operating system, the gold standard, And so it just became the dominant money, not just here, but around the world. There was no central bank then.
Yes.
On the central bank, the SARB's website, they'll point out that there were 32 private banks all issuing their own private monies. And those private monies were banknotes that were a claim on physical gold held in a vault. And there were also one trading company and two mining companies in the mid-1800s that issued their own banknotes, paper money.
So in SA, 1600s, 1700s, we had different forms of money. You're saying in 1800s it reverted to gold.
Standardized.
And anybody you didn't need a banking license. Anybody that could build a vault and issue bank notes could issue a currency or money, right?
Yeah.
Okay.
So I started recognizing these patterns. So you have eras of centralization.
Yes.
You have this Lombard bank, Rex dollar, implement this monetary standard. Everybody must essentially kind of be on it. That starts collapsing. You get this standardized operating system for money and gold.
Mm-hmm.
But decentralized businesses or counterparties issuing the money on this sort of operating system.
So competing monies in that decentralized almost.
Yeah. So the underlying money was standard. Was gold, physical gold specie. But anyone could basically build a building that would act as a bank vault to securely store gold. And then if Dane came to Bank Chris, you deposited some gold, I issue a banknote.
Yes.
Bank of Chris issues, this is worth
redeemable
1 ounce of gold, redeemable on demand at, Bank Chris. You could then trade that with other people and you'd have competing issuers of these banknotes.
Yeah,
Okay. But everybody knew they could come back to the bank and there was actual physical gold in the bank that would redeem the banknote. But it became quite efficient and easy to just trade in the banknotes. So the banknotes kind of became the form of money over time.
Yeah. Good as gold almost.
But anyway, it was this era of sort of centralized money by sort of decree. It's the Rex dollar, you guys, Lombard Bank implemented, people must use it. That starts to collapse. We move into a decentralized type system. Standard money, different types of operators operating on top of the money.
Yeah.
And then from 1921, the South African Reserve Bank is created and we enter an era of like ultra centralization of money.
Yes. Yeah.
And all sorts of economic functions.
Monopoly almost in the issuance of
exactly.
money,
So the state grows dramatically over the past 80 years.
Mm-hmm.
And I think we're in an intersection, and this is what a fourth turning is. We are right now in a fourth turning, and a fourth turning is essentially a transition phase between one of these eras.
Okay.
And I think we're moving back into a decentralized monetary era, not just money, on other aspects of politics and society as well. But obviously money to me is of particular interest, and it's what I do, and so that's what I'm focused on. I want to ensure that transition happens in a way that benefits people, that they can capitalize on it, and that it plays out in a way that's net positive, not a net negative
for the individual and effectively their freedoms and their rights on the monetary side.
100%. Right. So another way to sort of think about it, and this also overlaps a lot with these timelines, is if you look at North America, in 1776, it was the U.S. War of Independence. Okay, it was around that time.
Yeah.
Then if you fast forward 80 years, you get to the mid-1800s, which was when the U.S. Civil War happened.
Okay, so 75 to 100 years, almost what Ray Dalio is saying, these sort of secular shifts.
Fast forward another 80 years, and you
years.
get to the Great Depression, World War II era.
Yes.
And if you fast forward another 80 years, you are where we are today.
Okay.
So expect a lot of political dislocation.
Yes.
Trusted institutions become distrusted, and I think we're seeing a lot of that.
Yeah, absolutely.
So from healthcare to politics and elections to the money we use to is the stock market in our favor. I mean, you can kind of go through things here. And so that's the era that we're in. And it's in this era that there's an opportunity to build out new institutions that are trusted for the next 80 years. So this is we at this point in time where there's this generational opportunity to build great institutions that benefit society.
But before I ask you, what happens when something like as large as this as a monetary standard or any monetary system starts almost breaking at the seams, just to go back to the SA period with centralized under the Rex dollar under the Lombard Bank versus the decentralized period after that. Are there any stats around what period had less bank failures and what was sort of a more stable financial period for the monies at that time?
Look, so if you look at the 1800s, not just in Southern Africa but also around the world, there's obviously you had this sort of distributed banking system where you had many small operators on this gold operating system, this gold standard.
Yeah.
And there were many devastating collapses of small players.
Yes.
In that system.
But it wasn't systemically that risky that it would.
But it's systemically, it doesn't create that much risk.
Okay.
If you fast forward to where we're at today with these highly centralized systems, when errors are made, it's systemic and it devastates anyone who are institutionally locked into that sort of system.
Yes.
You know.
So it's leveraged, I guess, on both sides.
So like Zimbabwe is a good example. You know,
Yeah.
mistakes are made in the system, and there's institutional corruption and ideology and all this stuff. Mistakes are made, and the destruction of the money hurts most people, 99% of the people in Zimbabwe using that standard. And so that's the risk of the place that we're in the world right now, is we have a highly centralized financial system.
Yeah.
And errors in this, we all humans make mistakes.
Yes.
It's inevitable that big mistakes are made.
Yeah.
And that hurts a lot of people. I think what's exciting, obviously, is that in parallel, you have this decentralized system, and it's still nascent, it's young, but you have the ability to move across into a system that is more robust, I would say, and far more anti-fragile than the centralized systems. And that's, to me, where the asymmetry of Bitcoin and Ethereum and a lot of these crypto protocols come in.
But then in terms of the sort of a centralized system that's almost breaking at the seams, let's say it takes 75 to 100 years to start shaking, and we're seeing a lot of that with, the sovereigns and different central banks almost of the East, China, Russia, de-dollarizing themselves, buying more gold, almost distrustful of the reserve currency, or preparing for something that could be a seismic shift. Are you saying that, are you raising an alarm or spreading good news around the nascent financial system in blockchain? What is the nexus, or I guess, of the message that you're trying to bring across to people?
Well, I think that the main point is changes are afoot. Changes are happening already. It's not obvious to everyone, but they are underway. The future is here. It's just not evenly distributed, is essentially the quote from an author in the 90s, and I think it's a great one. There's a financial system operating out there that not many people are interacting with yet. I think it's only something like 1.2 million addresses have interacted with decentralized finance on Ethereum, which gives you the ability to not only make payments and transfer value from one person to another, but to trade assets between different people
without an intermediary.
Only trusting a smart contract on Ethereum.
Yes.
Which seems kind of trivial, but it's incredibly powerful, because it means that the internet can now be the world's biggest stock exchange. You do not need a stock exchange to trade digital assets.
Yes.
And all equities, most of the equities around the world, are essentially becoming dematerialized.
Yes.
In other words, they're becoming digital information. But you still rely on all these trusted intermediaries to facilitate a trade. So, for example, if you want to do a trade in equities on the JSE, you've got to have a brokerage account. There's a custodian, CSD, like Straight. There's a market maker. There's an exchange on top of which trades happen, and that's all essentially replicated on the other side of the trade as well. So you're dealing with all these different intermediaries just to do a simple trade.
Yeah.
You've obviously got to have a bank account too.
Buyer and a seller.
You can't just have a JSE account. You've got to have bank accounts.
And you have to go through a member, as an interface.
Exactly.
So it's almost privileged.
But now, people are doing this already on Ethereum. You can trade through what is known as a decentralized exchange, like Uniswap.
Okay.
And I can, over the internet, hit an offer of to sell an asset.
Yeah.
And I can trust that the smart contract's going to execute that trade. I don't have to know who the other person is. I don't have to I can trust that they have the asset because I couldn't even they couldn't even enter the trade if they didn't have the asset.
Yeah.
So it cuts out so many intermediaries. And so anyway, that's one example. You can do these types of trades. You can use ETH as collateral in a smart contract to take out a dollar loan. Now, and people are doing it. And you can do that as a perpetual loan.
So financial
at
services.
An interest rate of like 2 to 3%.
Yeah.
You don't have to pay the loan back. There's no interest repayments. As long as your collateral retains its value, which obviously fluctuates.
Yeah.
So you've got to be careful around the sort of loan to value that you know.
What do you call that practice? What do they?
Well, there's different protocols that facilitate this. One is MakerDAO, the other one is Aave, but I guess it's just credit intermediation through a smart contract.
Okay.
So yeah, anyway, a lot of this stuff is being built. It's happening in parallel. I think it might be a couple more years before it really hits the mainstream where retail kind of gets involved. But the logic to financial services are currently being built on blockchains.
Okay.
And I think it's a matter of time before the benefits of this open global operating system for money starts filtering through to everybody out there.
So let's assume there's this there is the innovation and growth happening in this decentralized space, because obviously you've got a lot of intellectual capital that's run into this, and it almost by definition should move faster and more efficiently than a centralized entity. A couple of guys sitting in a room can't make the same kind of decisions as a million minds or million, making decisions, or billion of them. But we talk about this new blockchain ecosystem as the trustless protocol. You don't need to trust it. You can trust in the system. You don't need to trust in the moral values of the guy on the other side of the trade. The question, though, is that many people would say, well, I've got that existing traditional financial system and the intermediaries that I do trust already. So why would my life, I guess the question is, why would practically, what would change in a guy's life, or the man on the street's life, as a result of the new financial system versus the one that's established for 40 years, if he's trying to make a trade, whether it's equities or take out a loan or so?
So look, firstly, it's cheaper and easier is the first thing. So it's just a better customer experience.
All right.
And so that's the one thing. But I think the other thing that will sort of fully reveal itself over time is that if you imagine owning, a fund in a traditional asset management business. So you have exposure, you've got an investment through a traditional asset manager, you obviously get monthly statements and they show you your performance. What if that asset manager gave you the option to, without even having to ask for permission, to just take out a loan against the assets in that portfolio? And with the click of a button and a 10 Rand transaction fee, you can use that as collateral in order to take out a Rand loan or a dollar loan.
All right.
Okay. To give you a sense. So securities lending is a thing, but it's typically only done by large institutions where there's a credit process at a bank involved, where you assess the counterparty, you assess the asset they have. There's a process to disbursing loans against that type of collateral. What's happening already on Ethereum is you can just do that instantly. So if you've got a crypto asset portfolio on Ethereum, you take out a loan against it. You can also, for example, if you want to make a payment to somebody else, imagine if you can just transfer a portion of your fund to somebody else.
Yeah.
Or you take out a loan against it and you make a transfer to somebody else. I think all of these things make investing in this type of asset class more interesting and attractive to people, particularly people who want to have more control over their assets.
I think I guess you talk about the benefits of it being cheaper, better user experience, and even unpermissioned, trustless. The one thing that jumps out at me is that these markets in more sophisticated financial tools that you want to use, it's usually more the erudite, high net worth, almost reserved for the more financially capable, and more the wholesale markets as well, like you said, the big banks. I guess I guess as a result of the high costs in those systems, they don't usually cater for the little guy, the financial inclusion side of the world. So it sounds like there is an opportunity, or one of the biggest benefits is definitely that anybody can get involved, right?
So the most sophisticated financial products that are available to high net worths and institutions are coming to retail.
Okay.
It's coming to Main Street, you know.
Right.
Everybody's going to be able to access those sophisticated type of products. So it's a game changer. So it kind of democratizes finance in the same way that the internet opens up information to people, which would have previously filtered down through gatekeepers. It's now, obviously we're in a fourth turning, so that causes a whole lot of confusion around who to trust, you know. But that's coming to the world of finance. And so I think there's an opportunity also, obviously, to be a trusted intermediary in a sense, where you can help people navigate the possible confusion and the dislocation that this causes.
So the same players that you see in the current traditional financial system can be,
They can be. The same players can be, but they need to understand this technology and what's going on in order to position for that.
And all you need effectively is an internet connection, right?
Yeah. I mean, really, you also need you need an internet connection, obviously a browser, and you need to add a plugin to the browser so that you can communicate on this new internet protocol, which is blockchain.
That's well, you did mention, and maybe
I wanted to mention something else too.
Yeah.
So you think about assets that act as collateral in the system, in the monetary system today. So we discussed things like equities. So you have securities lending, and people can use their equities, but it's a costly process. So
it's quite
not everybody does.
Analog. It's lengthy. It's usually paper based.
Here's also something that's interesting. So, if you're a South African with a South African portfolio of let's say equities, and you go to your bank to do it. Let's say you're that high net worth and you've got a huge position in a certain equity, and the bank's prepared to lend money against it. You're going to struggle to take the same basket of equities to Barclays UK or JP Morgan America to say, will you lend some money against my South African equities?
Yes.
It's going to be way more costly and way more difficult to do. Okay.
Right.
When you own a portfolio of, let's say, some crypto assets or ETH, doesn't matter where you are on the planet, or Bitcoin too, gold is the same thing, right?
Yeah. It's fungible.
But obviously these assets can follow you on the internet itself, Okay. So wherever you are, you have a collateral asset against which you can borrow money, but you don't even need to go through a bank to do it. You can do it on chain through smart contracts. And I actually think this is a big theme that's going to play out over the next 5 to 10 years, where ETH predominantly, I think, but also Bitcoin starts to compete with real estate as the world's dominant collateral asset to credit agreements.
Wow. Yeah.
So we're dealing with programmable reserve assets here.
Yes.
And it's still early stages of adoption.
Yeah.
But the applications are now there on Ethereum that make it possible for you to do all of this stuff using ETH as your collateral or reserve asset. So if you think about it like this, so most people own real estate. You're incentivized to own real estate because it starts to act as this collateral against which you can borrow.
Yeah.
So the moment you start paying off your home equity, you've got this sort of perpetual facility against which you can borrow in order to get gearing. But now think about real estate as an asset. Real estate is highly fungible in the sense that no two properties are the same.
Yeah.
So there's massive, discrepancies between the different types of quality of property. Different types
they're
of
non-fungible almost.
They're non-fungible.
Yeah. Okay.
Did I say fungible? That's wrong.
I think so. Yeah.
Non-fungible.
Yeah,
they're not the same.
Yeah. They're not the same. Yeah.
They're highly illiquid.
Yeah.
The moment you put bricks into the ground on a foundation, nature wants to tear it down.
Yeah.
So it's constantly in decay.
Yeah.
So you got
almost the law of entropy.
Entropy just wants to rip it down.
Yeah.
The cost of enforcing property right is the legal system and maintaining the courts. It's the police, it's the army, it's all of the infrastructure around ensuring that somebody's title deed is protected.
Yeah.
There's big cost to that. Well, don't calculate and add up these costs. People love to just diss Bitcoin for its energy consumption, but if you calculate all of those costs owning real estate, like it's a reasonable cost, you know. And obviously it's highly liquid. Did I mention that?
Yes.
You can only value real estate once it kind of trades. But if you're dealing... Anyway, so real estate is the dominant collateral asset in the banking system. Currently. Most rands are lent against real estate. Now, we've got this emerging asset class, ETH and Bitcoin. And so the dominant two sort of competitors here. ETH has an edge over Bitcoin because of its programmability. Okay. Where you've got a highly liquid asset, it's traded all over the world on different exchanges and different currencies. It's fungible, so all ETH are the same. It's the purest form of property right in that if I own a private key to ETH, I can prove that I'm the owner of that ETH. I mean, is there a purer form of property right in the world? I'm not even sure. You know, maybe a gold coin in your pocket. It's not in decay. It's not suffering from this law of entropy. So it's got all these great characteristics, and it's global. So I can I can leave South Africa, I own ETH, I go to America, I can just borrow against it. And so I think there's a shift going to happen in the monetary system where these assets are seen as superior than real estate.
To be collateralized.
In a monetary system.
There are a lot of concepts that you're sort of explaining now, right? And around different financial instruments or different financial engineering almost. Is it accurate to say that if we're trying to condense it into one thing, what this allows the individual to do? I think it's been said somewhere, I'm not actually sure if you said it to us, but that it allows somebody to become their own bank. Is that accurate? Or is that a way to summarize what you're saying in a nutshell?
Well, you can be your own bank if you want to. You'd need to be quite a bit of work to do that. In the sense that to be your own bank fully, you want to run a full node of Bitcoin and run your own copy of the ledger, which is something that banks do. You want to participate in mining, which is transaction processing and validating. You want to control your own private keys. If you do all of those things, you essentially are your own bank. And think about it like this. Money is an information system, primarily. And if you look at the money that we use today, it's 99% electronic money already. Okay, it's digital money. So 99% of the rands in existence, as well as most other currencies, are electronic. Those electronic monies are kept in commercial bank ledgers. So banks have things like spreadsheets and stuff to keep track of deposits. Deposits in a bank is what's recorded as broad money supply. And these bank ledgers are highly heterogeneous. In other words, they're all different. All of these ledgering technologies are extremely different. So you need ways of communicating between these heterogeneous information systems at banks. So making a payment from bank A to bank B doesn't just happen. Somehow you need to share that information between each other. You can't just use the internet to send an email to say, hey, I've transferred money from Chris's bank account to Dan's bank account, for obvious reasons. So you have other intermediaries between that to ensure that money is not replicated in a transfer. Okay. And so because there's this risk of replicating money in a transfer, which is known as the double spend problem, it's digital, so money can be created from nothing. And it happens at times, even today. And people Google that, they'll find instances of this in the news. Where transactions will be duplicated, things go wrong. So anyway, you need regulations and a lot of intermediaries in order to eliminate that risk. Because people can't be trusted with ledgers at home, if I have a ledger with my rands in it, and I say, hey Dad, I've sent you those rands, like how do you know that I've actually sent those rands, or I haven't copied a file and sent it to
somebody else?
That's why you have banks who are licensed commercial banks who have this infrastructure and these intermediaries to ensure that when somebody, my account with this bank is debited and your account at the other bank is credited, money has actually been taken out of my account and money actually has been added to your account. So that's why you can't just be your own bank in the world of normal money.
Yeah.
But in the world of Bitcoin and crypto, you've now got a mechanism baked in to prevent the double spend.
Okay.
It's like essentially what's happened is, do you have a Krugerrand with you?
No.
But
we should actually have
if I passed something physical to you, in the physical world, like we can all agree I've transferred ownership and possession to you.
Sure.
It's now in your possession. I don't have it anymore.
Yeah.
That was not possible in the electronic world pre-Bitcoin.
Yeah.
So you had to have eyes on transactions to ensure that when I say I've moved digital information to you, it actually happens.
Yeah.
The breakthrough of Bitcoin is that we've brought some of these physical properties of scarcity of the physical world into the digital world.
Yeah.
That was not possible pre-Bitcoin. So that's the big breakthrough. And that's why you can now be your own bank. So it's a long kind of winded explanation to this concept of I can actually keep money in a folder on my home computer and be my own bank.
But as I understand it, then you were saying that money is effectively information, and information obviously was democratized by the internet. That's why you had this double spend and copy paste and send to anybody problem, and you couldn't verify it. But that cryptography, which is I guess the underlying mechanics of a blockchain system, allows for that information to be packaged in a way where it performs like passing the Krugerrand from you to you. Is that correct?
Mm-hmm.
Okay.
Precisely. And if you think about a Krugerrand, a Krugerrand is information.
Yes.
It's got an atomic structure, gold.
Mm-hmm.
Gold's got its own information.
Yeah.
Chemists can analyze the properties of gold in order to assess whether it's actual gold or silver or something else.
Yes.
Each of these metals any material we find in the physical world has its own information. It's got its own atomic structure that we can assess.
Okay.
But you can't take the elements on the periodic scale, the information, which is physical in nature, and replicate that in an electronic format.
Yes.
That's what Bitcoin is in an electronic form. It's got its own information and unique characteristics and properties that a computer scientist can assess to see whether something is Bitcoin or whether it's something else.
Okay.
So is that I don't know if that's a useful framework of thinking about the differences between gold in the physical world and replicating or
the properties in
the digital world.
I think it's a very good way, but I think before we actually talk about sort of information or the value of money and sort of I guess the age-old question between gold versus Bitcoin and storing or transferring value over time. The big question that I know a lot of people would ask around this is that the regulators, right? You're competing against the monopoly on money. I think in SA, the Reserve Bank launched their Vision 2025 in 2018, which set out a strategy for the national payment system in SA to be overhauled, and they actually wanted to allow for innovation, as they say, and increasing access to the financial system. And I think it was yesterday actually the South African banks on the process of developing what they call the Rapids Payments Program. The question is what the traditional is what they are doing. Would this be a redundant system based on what's already being built in blockchain? And B, how would they see this burgeoning blockchain world? Is it a threat, or would they embrace it?
So the paradigm within which the national payment system operates is one where money is defined as a liability, and a payment is defined as the movement of a liability from one bank to another. What that means is a payment is the movement of a loan from one bank to another bank. The national payment system, that's the sort of starting point. Now you're talking about these new assets where you're transferring digital bearer instruments,
yes,
where you don't need all of the counterparties and intermediaries that exist in the national payment system as it stands today. And so this is kind of innovating and developing at its own pace, which is very rapid. The rapid payment system, process is trying to be brought in here, but really it's I think it's analogous to if you think about what an email or a WhatsApp is to a letter in the post.
Okay.
What's going on here is trying to find more efficient ways to move liabilities around.
Yes.
It's in other words, it's like we're
current,
moving letters around.
System.
Yeah, we're moving letters around, and there's a van that picks up, drives around to different points, picks up letters, puts it in the van, takes it to a sort of batch settlement place, separates out letters that need to go to Cape Town, Eastern Cape, all these different places, gets put in a new van, gets shipped off to these different places. There's a postman who drops off it. It's finding ways to optimize that process. Whereas what's going on in the world of crypto is you don't even have postmen. You don't have vans. You don't have pickup collection points, sorting distribution centers to move letters around. You're dealing with a new system where you can communicate directly.
Yeah.
So it's kind of like email, to sending a letter, or WhatsApp to sending a letter. It's very different, and so the national payment system, updates aren't thinking too much about this.
Okay.
At the margin, it's thinking about how to integrate it. But not fully.
So
because it's so different in the way that it does things.
Okay. So you're bargaining that it will converge at some point, but currently it's still on the margin.
It's tiny. It's tiny compared to traditional finance and payments and banking. It's still tiny, but I think it's I see this as a technological revolution that takes around 50 years to play out. We're only about 10 into this.
Okay.
So there's a couple more decades to go before the new system supplants and improves on the old one, on the existing one. Let me put it that way.
I think you used in one of your posts, I think you used a nice word. It seems like you said it was obviously very nascent, and that it's almost we're seeing a Cambrian period in the new blockchain space. And that's obviously the period in, I think it was about 500 million years ago when we saw the largest explosion in different species of evolution, right? So it was I felt that was quite apt. And what you're saying is that, hold on, you're comparing this new system to a couple of 100-year-old traditional system. It's only been 10 years down the line, but look at how fast the evolution of it is happening.
Yeah, the Darwinians have a difficult time, interestingly, explaining the Cambrian explosion because there was such a big, sudden explosion of different forms of life on Earth.
Yeah.
And many of those can't be traced back to anything that came before it.
Wow.
But that's just an interesting little sort of side note of the whole Cambrian explosion thing. But you've got this new technology that opens up the ability to innovate in money and finance, in money and banking. And so you're seeing a lot of innovation. And so many different things are being tried and experimented with. You can already see some early leaders in the techniques and the innovations that are being tested. And a lot of it, I think, will ultimately prove worthless. But the ability to innovate is what's obviously so important to rapid progress, and improving and updating sort of the techniques of money and banking. I think it's going to be similar to the early internet, where in the late 90s you had an explosion of a whole bunch of websites, and people didn't quite understand what harnessing the internet would mean to your business. There's some great interviews with Jeff Bezos talking about Amazon. Amazon was obviously using the internet as an interface to the public in order to create a marketplace. You'll see in these interviews, the interviewers are like CNBC and Reuters and whoever, like, but you're not an internet company. Like, you say you're an internet company, but you're not an internet company. And people didn't quite get what this was going to be used for and how it would benefit people over the next 20 years. There were a lot of websites, and everybody just got taken by the whole internet. You had to be a pure internet company in order to capture value, which obviously hasn't turned out to be be true. But a lot of those businesses went to naught.
Okay.
And there were some dominant players who remained, and obviously we interact with today.
The big guys.
And it's going to be similar in this space as well, I think.
Which actually brings me to an interesting point in terms of the service provider side. In the current traditional financial system, if you're looking to get a banking license or a mutual banking license, or want to offer certain financial services to individuals, there are a lot of costs, capital costs, labor costs, etc. And I think what we've seen is something that you've talked about, that you're very excited about, is DeFi, decentralized finance, where a lot of service providers can create products and platforms that perform or offer financial services, and they're setting it up for very low marginal cost. I think the one great example on a South African basis is Yearn Finance that you've talked about as well. So maybe if you can just give us a quick, what is DeFi and why are you excited about it?
Decentralized finance, it's known kind of colloquially as DeFi, is using smart contracts predominantly on Ethereum. It's being used on other blockchains as well, but it's predominantly on Ethereum, in order to build applications that eliminates intermediaries to financial services. So it's building a financial services ecosystem, leveraging smart contracts on Ethereum. Another way of stating it is inside financial services companies, whether they be asset managers or insurers or banks or whatever, there's business logic that's codified. In other words, these are technology companies. They've got technology in the back end running on their servers, and you've got IT professionals maintaining software and the systems and so on. But they all contain business logic. So you log into an online banking platform, it connects you to some kind of business logic in the back end. In other words, I've got a savings account. I want to earn interest. I deposit money in there. The technology system kind of takes over from there and makes the allocations required in order for you to earn interest.
Sure.
Now, there's obviously a lot of manual intervention that also happens in the background, but there's a technology system that sits there that codifies, business logic. For example, if you want to make a payment, swipe a card, messages get sent around the internet. That's kind of codified business logic of how to move a liability from bank A to bank B.
And
so
there's proprietary tech, bespoke tech behind each.
Precisely. So companies own those technologies, and they monetize it through letting people use it. Makes our lives better. We're prepared to pay for it, but that's how they make money. You're not able to, as an outsider to any of these companies, to access their proprietary technology for example, build a new application to make that payment experience better. So this is where open finance or open banking and this kind of stuff come in. Is to say, regulators are pushing those intermediaries with their proprietary technology systems to make some of that information open, so other developers can come in and build applications to make it a better customer experience.
And that is a good thing, I see, as a whole.
I think so. I think so. Now, like I said earlier, you're dealing with these entities with the proprietary technology systems, heterogeneous, different, unique technology systems, where if you're dealing with Bitcoin or Ethereum, you've got a standardized operating system on top of which anyone can build applications that anyone with a connection to that technology can consume and use. So that's what decentralized finance is about, essentially. It would be like, if all of the banks around the world suddenly had access to exactly the same operating system and built applications on top of that, value would flow seamlessly. You'd have developers who could come in and build applications that Bank A can just sort of start consuming. Bank A and B can both consume the same application. It just opens up the game, and that's essentially what a DeFi is on Ethereum. That's what it enables.
So is it correct to say that what Ethereum and Bitcoin and blockchain allows the individual to do, or the scope of the individual to do, is DeFi almost replicating those possibilities for the supplier of products on the system?
So you can think of, so Bitcoin can't do this. Bitcoin is a decentralized money system.
Yeah.
It's a money, it's a store of value, payments network, and I guess operating system for money rolled into one. So it does what a central bank does, as it issues its own money. It does what a bank does in that it ledgers the money, keeps track of who owns what, and it also does what the payments company does in moving bitcoins around between people. That's what Bitcoin does. Bitcoin doesn't have the capability to run more sophisticated applications on top of it in order to, I move my coin from me to you. I can't build rules around sophisticated rules that determine when and how the coin can be moved. Ethereum gives the ability to do that. So on top of Ethereum, you can say, move a coin from me to Dane if he's paid back a loan, for example, into another contract. So Ethereum is the place where a lot of the programmability is happening. Bitcoin's trying to copy that by copying some of the Bitcoin code and running it sort of alongside Bitcoin, but it's not quite the same thing. So I don't know where we started and where we're going, but you can kind of think of the two as you've got a simple calculator that's very good at just calculating sums, and you've got a smartphone on top of which you can run applications where you can also have a calculator, but it's an application that runs on top of Ethereum. And you as the customer on Ethereum, on the smartphone, can pick and choose which applications you want to interact with.
Gotcha.
Okay, so that's kind of the difference between the two. There's a lot of Bitcoin that are being tokenized on Ethereum now. So I think the two are, mutually complementary. They can work together. They can live alongside each other. And I'm not there where a lot of the Bitcoin maximalists are, for example, who it's Bitcoin or nothing. I think the two can work together. And Ethereum does certain things that Bitcoin can't do, and Bitcoin does something that Ethereum can't do. So I think they both have a place. And it's the same in the sense of where gold and fiat fits in. They're unique, and I think they'll be competing over time for different market segments to fulfill different types of use cases.
Okay. But if you... we've talked a bit about Ethereum and Bitcoin and DeFi, and but we've also seen, at least in the press or in the news, a lot of the old time, or like the old generation asset managers and money managers, especially in the US, that talk about this rise of sort of different coins and the danger around the speculative nature of it, or the almost casino element of it. What do you say to somebody that says what we're seeing in crypto right now is just a dangerous casino for somebody that could lose a lot of money or could make a lot of money, and not really utilizing or not serving the purpose of the utility that we talked about up to now?
Yeah, look, so I think it comes back to the comment from earlier that 99% of these tokens, I think, will end up worthless.
Okay.
So people who are wanting to get involved in the space from an investment perspective or speculative perspective, then you need to know what you're doing, and you need to be selective around what you invest in, what you think has. A lot of people say these aren't even investments, which I would disagree with. I mean, a lot of these things are pre-revenue ventures, but they're open source ventures. And so what's interesting about this space is the open source technology ecosystem, pre-tokens on Ethereum, didn't have a mechanism to fund itself.
Okay.
So Linux is the most used and runs the most critical software infrastructure in the world.
Yeah.
Okay, Linux, it's an open source operating system, not Windows or iOS. Okay. But Linux and a lot of the other open source technologies didn't really have a way to bootstrap funding for developers to contribute to build out that technology.
Okay.
Okay.
All right.
Okay, you had to get the donations from companies or individuals, or just have people voluntarily giving up their time to build out that open source software. What Ethereum and the tokens have introduced is the ability to launch a token to a community, which raises capital from them and gives those people a representation of ownership in the protocol and a level of governance.
Of the economic benefits, I guess, from the venture.
Over time. A lot of those benefits haven't yet been fully realized or determined yet. And so that's kind of the mindset that you need to take on a lot of these protocols is you're owning a piece of open source software where the economics and the use cases haven't been fully established. It's going to pivot like any startup essentially does. But this is an open source startup with no clear leadership and guidance, so it's a very unique kind of space. And that's essentially what people are getting into if they go into a lot of these different tokens. Tokens other than, I'd say, BTC or ETH itself.
So it's almost the old value investor protocols or methodology of extensive research before you and really know what you do, really understand the venture or the token, and really understand what your I guess risk capital requirements are before you look at just jumping into one.
Yeah, no, for sure. I mean, people need to be careful before they just chuck a whole bunch of money into this because they've heard a few buzzwords, and I see that a lot. People fall for buzzwords.
I wanted to just shift to the last bit, which is the gold and freedom, which is our favorite topics, obviously. So gold, obviously, it has a 6,000-year track record of protecting people from the long fingers of government, and we always like to say it's almost the original Bitcoin, and it protected the man on the street from inflation or inflationary fiat currencies, especially since the Nixon shock in 1971, where the currency in circulation is faith-based. There's nothing backing it. There's no physical specie. The question to you is, do you still like gold?
Yeah, I mean, I do. I like gold. I still own some gold. It's not as much as I used to own as a percentage of my overall portfolio. I think I'm so immersed in this new space that most of my sort of brain cycles go into understanding and trying to figure out where that's all going. But yeah, I like gold. I mean, gold's proven itself as a highly anti-fragile store of value and sound money.
In terms of store of value, there's that age-old debate. We've seen the Peter Schiffs of the world and these guys go on about the store of value properties of Bitcoin versus gold. How do you think they compare? How would you say they compare? Are they just like you said, different types of stores of value? Should they be exactly the same? Will they be competing, or is there, are the diehard gold guys correct in saying, Bitcoin has no value, you should be trusting gold, or should you be embracing Bitcoin as the new digital gold?
Yeah, look, I think it's been very sort of interesting for me to observe a guy like Peter Schiff's arguments against Bitcoin, because he's been trotting out arguments that people used to make against him to diss gold, but he's using those arguments against Bitcoin. He's saying things like Bitcoin has no intrinsic value. People would have said to Peter Schiff, they did, that gold has no intrinsic value. It's just a coin. You can't eat it. All this kind of stuff. But he knows as well as anyone, any good economist, that all value is subjective.
So you're referring to Austrian school subjective value of theory.
Well, I mean,
subjective value theory. That's the predominant
Austrian
theory.
School. Anything has. There's no such thing as objective and objective value. We value things as humans. We have subjective value scales. And that's how we value things, you know. And so not everybody agrees on gold's value, for example. Some people think gold is worthless. Other people disagree with that. But gold has had value over a very long period of time, and it's got different use cases. As money, as jewelry, in industrial use. So Peter kind of like trots out those arguments. Yeah, but you know, if it's not used as money, I can use it in jewelry, or I can use it in industry, or whatever. But the point would be the monetary premium of gold would drop dramatically if people stopped valuing it subjectively as a money for a store of values. So that's kind of the first thing that's been a bit interesting and baffling to me about Peter Schiff's kind of arguments against Bitcoin, because Bitcoin is also valued subjectively. It doesn't have other use cases like gold has, but I think that proves its success as a sort of upstart store of value asset, where it's got no other value, yet it's got a value.
A monetary value.
A monetary value. You can exchange it for other stuff at a reasonably high price, which some people would never have thought would be possible. Only a few years ago, I mean, the total market cap of Bitcoins is like $600 billion or $700 billion.
Yes.
It's miraculous for a digital asset to gain such a...
The gold market is 12 trillion, so it's still quite small.
It's still quite small.
But yeah.
So kind of coming back to the big picture of, I think, these two assets lines up with what we discussed earlier, is gold, I would say, is the best physical information system for money.
Okay.
You can't recreate it. The information structure is clear. It's hard to replicate. It's easy to measure. A gold coin, is it a gold coin? You do the Fisher test or all the different things, you know, the ping test. It's a good form of physical money. Nothing else has beaten it in the physical world.
Yeah.
But it does not, that information, the atoms of gold, doesn't replicate into the digital world. And I think Bitcoin is in the digital world what gold can't be.
Unless we digitize gold and try to do the same.
Well, you see you can, yes.
Yeah.
You'd need to be the most uncorruptible counterparty, and I guess.
I'm not pitching Troycast at the moment. I think I think it's more it's actually more a sort of an understanding perspective where we're saying, all right, each of them has monetary value, and the monetary value is subjective based on people's unique preferences and aggregated. But there is that element where, and this is the question for the economist in you, is there is that value in gold outside of it being a money, where it has a value in the marketplace for jewelry, industrial purposes, etc. Whereas I don't know if that is if Bitcoin has that additional value. And the question is that why perhaps there's a volatility difference in that, where gold seems to be more of the stable money, but Bitcoin seems to be more volatile, or is it just too young at the moment?
Well, I'd say there's two things here. So the first thing is Bitcoin is a startup digital gold. Okay. It's 10 years old, so it's young. It's still got some teething pains. It's going to have some of its own issues over the next few decades. Don't know what those are going to be, but it's going to be there. And so startups are volatile.
Yeah. Okay.
A startup's not gold. It's very different, So Bitcoin is, I'd say, the most mature monetary startup in the digital space. And you've got other things like Ethereum and whatever else coming as well. And they're going to have probably even more teething pains because they're trying to achieve more complicated and complex things. And so the risks of something going wrong is bigger. But then the second thing I wanted to say, what was your question? What were you talking about again?
Around the additional value.
And then the other thing is, the second point is, Bitcoin is the most secure database on Earth, and it's open.
Okay.
Okay. And so if you want to store something in a database that's open for anyone else to see,
yes,
there's no better place than Bitcoin to store that information. And so that's one use case that has not been explored of Bitcoin.
Okay. So you think there's that additional value perhaps?
That's coming. The innovation still needs to happen in order to figure out ways to use the most secure
fascinating
data center in the world. So one example is you can now digitize legal agreements.
Yes.
Okay. And so let's say I sign a legal agreement electronically and I send it to you and you sign it electronically, and we create a digital hash of the file, which is like creating a unique fingerprint of the file, which is a small bit of information.
Yeah.
We can, in a Bitcoin transaction, store that hash in the Bitcoin ledger.
Okay.
That we know no one can go and tamper with and alter. That information is embedded there forever, like the first transaction on Bitcoin's ledger, which spoke about the banks.
Yeah. And you say
Chancellor on the bailout for another bailout.
Right.
That comment?
Yeah.
So in China, for example, the courts have found that a bit of information stored in the Bitcoin blockchain is provably happened in the past.
Okay.
So if you decrypt that hash and you decode this file and you can link back the signatures to actual people, we cannot disagree with each other that something happened in the past. So that's like one use case that hasn't been fully explored, but it's going to be explored. So the Bitcoin use cases are, primarily right now money and store of value, payments mechanism, but it's also highly secure. The most secure database on the planet. Okay. And so the innovation around that still needs to happen too. So we'll see.
So it's an exciting time. I think as long as these two monies can supplant fiat, I think we're in a good space for a good future.
Freedom of choice is what it's about. We need free market money.
Free market money.
Monies need to compete, and the best monies need to win.
Yeah.
And I think the benefits of that are so big. I don't think people generally realize that. To have a standard and trusted kind of language for intermediating or communicating and expressing value around the world that can be digitized is,
What's actually a fascinating story from history is the dollar, the name where the dollar came from. It was a count in Europe. I can't remember what era, but obviously there were competing monies, and he was his name was Joachim, and he was so good at minting gold coins that people started choosing his coins as the preferred money in the marketplace, and they were known as Joachim's thalers, and then later on dollars, and that's actually where the US dollar got its name. So I like that a lot.
So we in that space at the moment of innovation around money, different types of issuers, centralized issuers, decentralized issuers. Where's the trust and legitimacy going to lean over time? And my thinking is decentralized systems, decentralized monies, of which I would count gold as one, with trusted issuers on decentralized technologies. I think is going to be a big market cap of those forms of monies and store of value. But then I also think the truly distributed digital currencies that secures the tokens for these types of assets that are issued by counterparties are also going to be a massive asset class in their own right. And it's going to be interesting to see how these different assets compete.
That's fascinating. And to think that this is all since 2011.
Yeah.
Chris, you and I first met at a talk given by Russell and Bertie, not far from here actually, at the Free Market Foundation. You've also written for Mises.org, which is a laissez-faire economic think tank and publisher. Is it safe to say you're an advocate then for free markets and freedom, or civil liberties, if you can call it that?
Yeah, I mean, it was myself and a very good friend, Russell Lamberti. We founded the Mises Institute, South Africa, and I think it was 2011. And so it was around that time, a couple of years before that I went down the rabbit hole of Austrian economics, which is an incredibly deep foundational theory of economics, which I absolutely loved. And that's where I really got into the monetary system and how it works, particularly after the global financial crisis of 2008-9. It's where I started learning about free markets, free market monies. A lot of these theories, in fact, none of these theories were taught to me at university, and I studied economics. They were sort of seen as these weird fringe bunch of crazies who care about
economic school and
freedom of choice.
The dark side.
And so I've cared about that a lot over the last decade, and I want to, in the world of money, I'd like to be a part of bringing freedom of choice back to people. I think to a large extent, the nature of how the monetary system is structured now and how it's set up, you see a lot of regulation because electronic money is so corruptible. It's extremely corruptible. Okay. A good recent example being VBS Bank.
Yes.
And if you read the auditor's report, the attorney's report around it, they were running their biggest loan book in an Excel spreadsheet. There are no regulations around which technology you need to use to keep track of bank deposits. Okay, so first point. Regulations are technology neutral. Don't care about technology. Cares about activities, conduct, this sort of thing. But there were obviously people there who realized that their own internal checks and balances to prevent the creation of money from nothing, and the external checks and balances in the form of an auditor and shareholders and investors, on top of which the ultimate backstop tends to be regulators, lawmakers, law enforcement. And so they essentially were running their biggest loan book in an Excel spreadsheet, and they realized that they could just create money from nothing and create loans in order to corrupt the incentives of the checks and balances in order to allow money to be created from nothing, and they created over R1 billion from nothing. And there were ways found to hide it. Now, what I love about gold in the physical world and Bitcoin and some of the other crypto assets in the electronic digital world is that you eliminate the need for human intervention in a way where there's outsized influence on the system. And so you have an information system where the risk of fraud is massively minimized, And I think that's as everything is increasingly digital, it's so important that we have a system like this where people who have a culture who values money that retains value over time, so that they can preserve capital and intertemporally pass it along to their kids and their grandkids, and actually save in something that's going up in value, is super exciting and important to me. So I'm playing my role there. And I guess the point I wanted to make was the way that the system's evolved is in 1971, the first Intel microprocessor came out of the factory.
Was it 4004? Yeah.
That ushered in this more increasingly digital age.
Yes.
But it was also in 1971 that the gold standard was ended.
Absolutely.
Okay, so the gold standard is ended. Money becomes increasingly something that's unhinged from something that keeps it scarce. But it also becomes increasingly digital. And so you have to have a massive build-up of regulations to keep these data centers secure, ensuring that they keep the money scarce, which is electronic now. And my read of the situation at the moment is that the regulators that we have right now today, many of them weren't even born in 1971.
Okay.
Most of them were still in school in 1971. They're now governing a system that was essentially born then. They inherited a system where I would say the design is suboptimal for the problems we discussed. Now there's a new system in town. It's fringe, it's tiny. But but I don't see them necessarily as like not wanting to see it succeed.
Okay.
Because there are real problems in human nature.
Yes.
That becomes difficult to solve, and it only kind of gets solved. You only see it with increasing regulation that stifles a lot of activity and innovation. And so I don't see them as sort of opposing necessarily this new stuff. It's just really trying to get a head around how do you allow it to proliferate in a way where it doesn't destabilize everything. You know?
But it seems like you've stuck your hand up, and you've been doing some great work at Investec around, as we understand it, almost integrating this fringe new financial system into a trusted financial bank in South Africa. Can you maybe just tell us what you're doing there at the moment, and why it's so exciting?
Yeah, look, so I'm studying. We've got a team, and we focused purely on blockchain and crypto assets, and we're trying to see how a commercial bank transitions and remains relevant in this new world. How does a bank connect to these new technologies in a way where the customer doesn't really need to know that there's a change happening in the background, but in a way that, you know, doesn't expose us to undue regulatory risk or other risks that we're not even aware of because this technology is quite new. So that's essentially what my role is about, and it's a lot of fun, but it's also extremely challenging at times.
That's cool. Well, last question from us, and it's something we ask everybody, all of our guests, and so I have to ask it. How do you define freedom? Freedom
to me is the ability to live my life in a way where I can, I guess, live life to the fullest, but within the constraints placed on me by God, my creator, essentially. So it's not a free-for-all. There's freedoms to a point where God's law comes into play that puts a check on your behavior. And so to me, that's what freedom's about.
That's awesome. On that note, Chris?
And just to add on that note,
yeah. Okay.
What's so important to me in the world of money is that we use equal weights and measures.
Okay.
And so that's unequal weights and measures are an abomination to God.
Yeah.
Because what is an unequal weight and measure? It means I've got a gold coin that's been clipped, and you've got a whole gold coin, for example. But I'm a fraudster because I'm trading in a gold coin that doesn't have its full weight.
And it might have the same face value.
And so I could be a fraudster and trading with people, clipping gold coins, which emperors and kings obviously love to do over the years, and that's what inflation is.
Yeah.
So to me, this is essentially important to, you know, having equal weights and measures being brought back into society again, so that we can trust the money that we use, and it's not corruptible by humans.
So the savings base that we're on is sound, not corruptible and fair.
You've got to build an economy on a sound foundation, right? You don't want to build it on the sand. So we've got to build a value system on a sound foundation, so that we can not only communicate value between each other today in an economy, but also over time to future generations.
That's cool. And on that note, thanks so much for being with us.
Thanks,
Chris.
Dan. It was cool chatting to you.
Cool. Likewise.